Hello, welcome to today's webinar with Wahid Invest alongside Options UK. This webinar is regarding Halal Workplace Pensions and it's an introduction. I'd like to introduce myself. My name's Abul Fazl. I'm the Business Development Manager for Wahid Invest in the UK. I've been in the wealth management industry for the last 20 years, mainly as a banker, giving investment advice as well as wealth planning advice. I'm not allowed to give advice at Wahid Invest, as many of you will know, but we can most certainly use our knowledge and experience to help guide you and give you the factual information that you need so that you can make the best decisions for yourself. Alongside me, we have Roger Grosvenor from Options UK. Hi, Roger.
Hi there, thanks Abel. Roger Grosvenor from Options. I'm the Business Development Manager at Options on our Master Trust, and I've had 25 years experience in the UK corporate pensions industry, and I'll be talking to you a little bit later about our Master Trust and our proposition overall.
Thank you very much, Roger. We're also very pleased to let you know that we have a special guest, Mufti Faraz Adam. Just to introduce Mufti Faraz, he serves on many Sharia review boards, as well as holds many different advisory positions within Islamic finance institutions across the world, as well as sits on our independent Sharia review board. He completed a 6-year Alimia program in the UK, after which he went abroad to complete an iftar course in South Africa. In addition to all of this, he also holds a master's degree in Islamic finance, banking and management from the UK, as well as being a certified Sharia advisor and auditor. So without further ado, what I would like to do is just share my screen so that we can start to introduce the presentation to you. Okay, so in terms of today's presentation, what first and foremost I'd like to remind everybody is that today's presentation is for information purposes only. Please do not use any of the information that we provide today as advice. If you do feel that you need advice, please do speak to a specialist in terms of advice, whether that's tax or as well as financial advice. So what we'll cover off today, we'll talk about the pensions market, where we are right now, and where Options as well as Wahid have identified a demand and a need for a diversified workplace pension. We'll also talk about the key age-old question about pensions versus ISAs. We get this asked a lot, so I thought it's worthwhile just covering that off. We'll then talk about tax relief. Why is that important? How is that beneficial for your pension? We'll then focus on the investment range that Wahid offers. Why is that unique in the marketplace at the moment? I'll then introduce a brief overview of Wahid UK and what makes us a wealth manager within the UK. Then Mufti will talk to you about purification, what's halal, what's haram. And why Sharia compliance is important for us to adhere to. I'll then pass you off to Roger, who will then introduce Options UK, as well as talk to you about the governance and experience that Options have with it as a pension provider, master trust pension provider, should I say, and summarize at the end for us. So let's start with marketplace and demand. So what you'll see here is that before auto enrollment started, back in 2012, half of the UK workforce population had some form of retirement planning savings. Fast forward 7 years since then, up until the end of 2019, and essentially auto enrollment had done what it needed to do, and the workforce had taken up some kind of pension provisions for their future, and so the market has grown from 47, just under half, to just over 3/4 of the market now has pension provisions in place. The Muslim pension market is worth approximately about 47 billion out of a 2.1 trillion pound market. So why is it so small, essentially, is what I'm getting at here. And what you'll notice in the chart at the bottom is that out of the near 3 million Muslims who are in some form of employment, only 32% of them have some form of occupational pension scheme in place. What you'll also see here is that Muslims with a private pension of some kind is about 35%. So you can see here we significantly lag behind the general markets in terms of, the general population is about 3/4 of the workforce, but Muslims who identify as Muslims and are in some form of employment, it's only 32 and 35 respectively, and that's something which is quite concerning. And it's something that Options UK identified alongside Wired quite a while ago, and it's why we've come together to offer something like this. Now, there's many different reasons for that, and it could be things such as cultural reliance on other family members. Could be looking at asset classes such as property as your retirement planning, because generationally speaking, lots of people have, certainly those who grew up in the 70s and 80s probably remember the pension mis-sellings and the companies which folded and there was no pension provisions. But things have changed significantly in that time, and in terms of regulations, rules and regulations, it's a lot stricter now. So people, can have peace of mind knowing that what they're saving for now is going to be there in the future as well. But more importantly, a lot of people that we speak to say to us, well, I didn't even know that it's halal. Let alone, my pension provider offers a Sharia option. They didn't even think that, pension provision was halal in the first place. And hopefully between us and Mufti Faraz, we'll be able to dispel those myths. So moving on, our partnership goals is to offer the UK's first fully diversified halal workplace pension scheme. We want to offer this to the mass market, and we'll do this by offering it to the sole trader who's looking to set up a workplace pension scheme for himself, all the way up to the larger schemes where there's several thousand members of staff who want to join. We can take care of that through working with a master trust provider like Options UK. We're also, keen to bring something to the market which is, gives you a choice in terms of different levels of risk, which is then appropriate to whatever your circumstances are at the time. But it's also lifestyle, meaning that as you get closer and closer to retirement, automatically we're taking care of the risk element within your portfolios. And this is something I'm quite proud to talk about, and we'll go into detail a little bit later on. All of this obviously is provided by a Muslim-focused investment manager in Wahid Invest and administered by a very experienced pension provider in Options UK. So let's start with the age-old question of pension versus ISAs. It's something that I get asked time and time again, and it's something which is very relevant, especially to those who have ISAs, know what ISAs are, or are thinking about starting a pension. One of the key questions we get asked a lot is, I'm in my 30s, 40s, I've been doing ISAs. Is it worthwhile me starting a pension now? So let's go through those comparisons. So you'll see here, so in terms of pensions and ISAs, one thing to note here is that both are called tax wrappers, okay? The wrapper means that anything held within it are treated differently for tax purposes. Pensions are long-term. You cannot access until retirement, whereas ISAs give you that shorter-term access that you may need. Whilst both pensions and ISAs offer a tax-free income and growth during the accumulation phase, pensions give you tax relief on the contributions when you go in, as well as, for workplace pension schemes, you get employer contributions, and we'll talk about that shortly as well. Taking money out is where the ISAs, becomes really advantageous, as there's no tax on drawing from an ISA or on the capital gains liabilities held or money held within an ISA, whereas the pension pot, 25% of whatever your pension pot is at the point that you choose to retire, can be withdrawn as a tax-free lump sum, and the remainder will be treated as a form of income. Now, remember, you did get tax relief when you were paying in. Pensions have another unique feature that many don't consider, and it's in terms of legacy or inheritance tax planning. Pensions are held in a trust for you, which means it falls outside of your estate, so that when you pass away, this money can be passed on to beneficiaries, and you'll nominate who those beneficiaries are when you're setting up your pension scheme, or at some point if your lifestyle changes or you get children in the future, you can add beneficiaries to your pension scheme, so that if you were to pass away before drawing the benefits, that pension pot can actually be passed on to your loved ones without any inheritance tax consideration. So it doesn't even need to be factored into your estate at that point, and it can be passed on. So it's a really, really good planning tool from that perspective. So hopefully that's given you a very high level overview in terms of what the comparisons are. I've gone through the main points there. So the answer, I suppose, to this question is do both. If you, and that's as long as you can. As with any long-term investment strategy, diversification is key, and this goes for this goes exactly the same for utilizing tax wrappers wherever you can as well. However, one thing that the ISO can't give you, and that's the main reason why you would utilize a workplace pension scheme wherever possible, is the free money that a workplace pension scheme is able to give you. And that free money comes in the form of employer contributions and tax relief. So let's have a look at that. So how does a pension work? So you'll put in money, your employer puts in money, you'll get tax relief on your contributions. All that money will then be put into a pot, it will grow, and then at retirement you can then choose to take a combination of any of these. You can take 25% of it as a tax-free lump sum. You can use the whole pot to buy something called an annuity. You can take lump sums as and when you want, or you could take the whole pot as one whole lump sum in one go if you wish. So there is a lot of flexibility about what you can and cannot do now with the pension scheme. A lot of you may have other asset classes already earmarked, for example, property, where you're taking a rental income from it anyway. So you may not need the money saved up in a pension pot. Then, as I said before, it can be utilized from a legacy planning tool, and it's quite good for that. So I've mentioned tax relief a couple of times. I've talked about the free money. So let's have a look at and concentrate on that now. So let's say, for example, let's use some pounds and pence here. So let's talk about £40 extra free money that you get. So if you contribute £40 each and every single month into a pension scheme for yourself, okay, you'll get tax relief on that contribution. So you'll get an extra £10 back from the taxman. So once you pay in money, options will then reclaim £10 tax on your behalf. Then on top of that, they will take another £30 from your employer, and all of that will go in to a pension pot and be invested with us, and so you will get a contribution of £80. Okay, so what you would have done is contribute £40 yourself, but you would have got an £80 pot to be invested each and every single month. How does that work? So with auto enrollment from this tax year, there are minimums which need to be paid into a pension scheme, and the minimum employee contribution is 5%, and that includes the tax relief as well. Then there's employer contributions of a minimum of 3%, which gives you a total contribution of 8%. So hopefully those numbers now start to make a little bit of sense. 40 plus the 10 is the 5%, 50 plus the £30 employer contribution gives you the £80 or the 8% at the end of each month. And that will be going up from tax year, from next April, will be going up to 9%. So, the question here is, would you give up an extra £40 in your pay packet if your employer was to give that to you? I certainly wouldn't. So you can see why contributing towards a pension scheme is definitely beneficial. So when we're talking about Whitehead Invest and we're talking about the investments, one of the key things that Options UK were keen to do is unlike other providers out there who offer you a Sharia option if you're lucky enough, not all do, some do, but those who do, what they tend to offer you is an equity only fund. Okay, it's just one fund, all equities. And Options wanted to do something a little bit different, as did Whitehead Invest. And so we've come together and we've come up with a choice of 8 different models. Those of you who have counted the columns at the bottom will see that actually there's only 7 there. I'll come to the 8th. So let's have a look at the 7 in a little bit more detail first and foremost. What you'll have here is self-select models. So these are ones which, you won't go into the default. I'll introduce the default shortly, but these are ones that you can choose to be in at any point. Once you log into your member portal, you'll be able to click out and decide which one of these models you want to be invested. So I mentioned before, most providers, if you're lucky enough to have some kind of Sharia option, they'll give you a Sharia fund to invest in, and that tends to be the HSBC Islamic Global Equity Index Fund. The column in purple is that, and we're still offering that as a an option. Why? Actually, it's a very good fund. It's done very, very well, and so therefore, we use it for our personal customers, and so for workplace pensions, we'll offer that as well. But what we've have seen, certainly, credit crunch and more, recently at the earlier part of 2020, we saw equity market doesn't always just continue to go up and up and up. So this is where diversification is key. Don't have all your eggs in one basket is the name of the game here. And we're certainly firm believers as a discretionary fund manager that you shouldn't have all your eggs in one basket. So what do? We've introduced a few other funds and asset classes. Fixed income in the form of Wakala deposits here. You've got a couple of different global equity funds, as well as an emerging market fund, as well as gold. And the reason we would do that is we can't predict what's going to happen in the future. And certainly for those who are in the early 20s, who are in so the Sharia fund at the moment, which is the HSBC Global Equity Index Fund, is fine. But as we saw earlier on this year, where the market did go down by about 30%, those who have a Sharia option were very fortunate that Sharia compliance means that we're not invested in over-leveraged companies and things like that. So they wouldn't have seen those drops of 30%, but certainly, 17, 18% were the kind of drops that we saw earlier on in the year. So in those kind of circumstances, when you've got 30, 40 years ahead of you, that's fine. Okay, because you can ride out those fluctuations. Remember, with a pension scheme, you can't access it until you choose to retire or choose to take the money from that. At the moment, the minimum age is 55. It's going up to 57 from a couple of years' time, I believe. What you then be thinking about is, well, actually, let's say, for example, if I was 64 and a half in December of 2019, what would I have done in terms of I'm looking to retire in sometime in 2020, but all of a sudden I've seen my pot, go down by 15, 20% over a very short period of time. That would have been quite scary. And at the moment, that would have been the reality for a lot of us who have just an equity-only fund. And again, this equity-only fund only gives you access to 100, just over 100 different lines of stock within it. So what we're trying to do is offer you a choice of different models, which actually not only gives you access to different asset classes, such as gold and fixed income, as I mentioned before, which then reduces the risk within a portfolio, but also we give you access to a model which then gives you exposure to over nearly 400 different lines of stock rather than the 100. So again, by increasing the number of companies that you're exposed to, reduces the risk of any one defaulting or going down in value. And as I said to you, these are all self-select models, and this gives you a choice for those who are, inclined, who have the time, the knowledge, and the inclination to make these kind of investment decisions. But what about the rest of us who probably have gone into some kind of investment scheme through work and probably not even looked at it, let alone whether there is a Sharia option or not? And actually, statistically speaking, that's probably about 95% of the population will just stick to their employer's default option. So what we want to be able to offer your employers and you as members is a default option as well. And that default option is a lifestyling option, which means that as you get closer and closer to retirement, we'll start to automatically reduce the risk within your portfolio. Okay, we're doing this on your behalf, so that if you are in December of 2019 and you're in this workplace pension scheme, had we set this up in time, and you're 64 and a half, as I mentioned to you before, the chances of you losing 15 to 20% of the value of your pension pot over that period, over a short period of time, would have been reduced as a consequence, because of the fact that we would have reduced the risky assets within your portfolio automatically for you. And I think, ladies and gentlemen, I cannot stress this enough. This is something which isn't available at the moment, certainly within the Sharia pension planning market for halal workplace pension schemes. So I'm very, very proud that we're able to bring something like this to the market and be able to offer you a choice not only to invest in something which is Sharia compliant, but also it's now risk managed for you. So just a bit of an introduction to Wahed to those who have who are new to Wahed Invest. We started operations back in 2015. 2017 is when we started to offer our services in the retail markets in the US. In 18 we launched in the UK, 19 more internationally. We are, both SEC as well as FCA authorized and regulated, as well as a few other jurisdictions along the way as well. We're trusted by over 100,000 clients worldwide in that very short period of time, and that's all been, thankful being able to be delivered due to having our own proprietary app, which we've developed from the ground up. And has enabled us to scale our operations and offer it in so many different countries at the same time. We are a voting member of AOFI, who are the accounting and auditing organization for Islamic finance institutions. They set the rules in terms of what we can deem to be Sharia compliance, and we as a member have to adhere to them, and we are audited. And on top of that, we have our own independent Sharia review board, which Mufti Faraz is part of, who then ensures that any investment decisions, certainly within our own ETF listed on the NASDAQ, any investment decisions we're making is in accordance with the rules set by AOFI. And that's all we do. That's our sole focus as a wealth manager, is to have Sharia compliant investments. I'll pass you over now to Mufti Faraz, who'll give you an overview of Wahed governance in terms of what's Sharia compliant, and talk to you about the halal and haram aspects of income.
Bismillah ar-Rahman ar-Rahim. So when we discuss the issue and subject of Sharia governance at Wahed, what does it actually mean? When we talk about Sharia compliance, it doesn't just refer to a tick box exercise, and neither does it mean investments purely from a spiritual perspective. Sharia governance is all about social impact, right? Sharia governance, having a framework which is Sharia compliant, means that the investments are made in such industries and avenues which are not harmful for the society, the environment, or the wider community. Therefore, if you look at the screening criteria we've deployed at Wahed Invest as a Sharia board, a number of industries have been excluded, such as alcohol and beverages, because we know the impact that it can have on individuals from a health perspective, as well as a society, and the impact it can have in terms of disorder. So therefore, from an Islamic perspective, the entire alcohol kind of sector, whether it's from production, distillation, whether it's selling, whether it's anything end to end to do with that industry, is banned from an investments perspective. And likewise, tobacco. Investing in tobacco has also been excluded simply because of the harm it does, and that's why. And it's so clear that the very box of cigarettes, it clearly mentions under the harm. So even the government have mandated that the harm is illustrated to the customers and consumers. So Sharia doesn't want people to be harmed, and by negating such investments, what you're doing is you're deploying funds for the benefit of the community as opposed to the harm and detriment of the community. So all those areas which can cause harm to the community, to the society, to individuals, mentally, economically, physically, from a health perspective, as well as society, from a societal perspective, all of these industries have been prohibited and barred from investments from an ethical, from a Sharia perspective. If we move to the next slide, now the next slide is very important because I think this really drills home the idea of pensions, and this is why I have been so passionate about pensions, because look, pension investments It's a long-term investment. You're talking 40, 50 years. A person will have invested for so many years his hard-earned money into his pension, and then when he retires at 65, 70, whenever he retires, this is the sole income he'll be relying upon. And this will be his income, which very likely will support him until his death. And when we talk about pensions and investments, I think for it to be halal and Sharia compliant is probably the most important investment for it to be halal and Sharia compliant. Why do I say that? Is because, look, a person when he's retiring, he's in his old, 70s, he's frail, he's weak. At that time, the life expectancy is not huge, right? And at that time with complications, health deterioration, a person can pass away. He's very close to passing away. The last thing a person wants is that he's benefiting and he's consuming income from a pension which was not Sharia compliant. I mean, that's the last thing a person wants, because when we say a pension is not halal, it's not Sharia compliant, that means the income that you're deriving from this is also impure, right? All the profits from such a pension is impure. And if you're consuming that in those years are the very years a person, any Muslim, would want to be, more focused on his journey now to the next life. And the last thing you want is being a consumer of impure income and something unlawful. And a hadith just comes to mind here, a prophetic narration, where the Prophet Muhammad sallallahu alaihi wasallam, peace be upon him, he mentioned that imagine a person who's disheveled, his hair is all over the place, he's a wayfarer, he's been journeying, traversing the deserts, he's tired, he's in a really pitiful state, and he raises his arms to the heavens and saying, "Oh my Lord, oh my Lord." And any person who would look at this individual would feel very sorry for them and empathize with them. But then what the Prophet Muhammad said in this, he said, how can such a person's dua be accepted if this person's wealth is impure, he's been consuming impure income, he's been eating unlawful food, he's been wearing clothes derived or sourced from unlawful income? How can such a person's dua be accepted? So he gave this example to say, look, a person, he might be in such a pitiful state, but if a person is sourced with impure income, he's consuming impure elements, his wealth is impure, then even though apparently you'll be very desperate and in need, and any person would feel sorry for you, but you've done all the wrong things that you could possibly do to have your prayers accepted at this point. And this is what really pensions is all about. That this is your retirement income. So that's why pensions, you have to have, as a Muslim, a Sharia compliant pension. There's just no other way, because the consequences and the trade-off of not having a Sharia compliant is just too far great of a trade-off. And that's why I commend Wahid Invest for launching this this product and really making halal Sharia compliant pensions accessible to the Muslim consumer market and the Muslim employees in the UK.
Thank you for that, Mufti. What I'd like to now do is pass you over to Roger Grosvenor, who'll introduce you to Options UK.
Excellent. Thanks, Abul. I just want to spend the next 10 minutes giving you an overview of Options UK to give you the confidence that we're a very strong master trust player and that we can look after you as employer and indeed your members. So we established our master trust back in 2012. So we've been looking after employers for 8 years within that master trust wrapper. Last year, all master trusts had to get approval from the pensions regulator. There were over 80 master trusts before approval was required. Now there's only about 30. As you can imagine, the pensions regulator required a lot of work and also financial commitment to gain that approval, that authorization. So now there's about 30, of which 15 are probably single employer master trusts. So the general public, if you like, has got access to probably about 15. We've been really successful in the master trust world. Since 2012, we've now got over 3,000 employers who participate within our master trust, and there's about 140,000 active and deferred members within those 3,000 employers. Now, as Abul said earlier on, we are open to all. We can accept a scheme of one member or more. So that, as you can imagine, has provided us with a lot of small companies that we deal with, but equally, we're very used to dealing with super large schemes as well. As you can see, our largest scheme is in excess of 5 members. And in fact, our top 25 employers have got over 1,000 members each. We just deal with pensions, but we do deal with other types of pensions, such as self-invested personal pensions. We've got over 7,000 of those that we administer on behalf of members. And this has afforded us over £1 billion of assets under administration, money that we look after for employees and employers. Every year, the annual contributions grow within our master trust by over 45 million. So as you can imagine, those assets under administration are growing exponentially. We provide administration services, not just for the master trust. Like I said, we also provide it for the self-invested personal pension, also SASs, which are small self-administered schemes. And we're also the third-party administrator for several other master trusts. That includes a firm called Lewis, a firm called Amber, and equally the Islamic Pensions Trust. We look after their master trust within the auspices of Options UK. So we're tried and tested by existing master trusts as well as employers. All we do is pension provision. I like to say we look after the member and Wahed look after the money. We try and specialise in one particular area, and we bring in specialists from other areas, such as Wahed, to look after the Sharia Compliant investment. We're backed by our parent company, STM, who operate out of Malta and Gibraltar, and they've backed us financially, but also with their time and experience in getting that TPR approval and the continued authorization, regulation and governance that's wrapped around that. So a lot of companies will tell you that they're customer centric, but we live and breathe that. The passion and enthusiasm that's provided by our staff up in Milton Keynes is second to none, and we don't lose schemes because of poor service. We've got a well-experienced team of administrators up in Milton Keynes. About 40 people look after the corporate book, and we've got about 100 staff in total. So this is all backed up by, obviously, our trustee board, who look after the governance aspects of the master trust and make sure that good member outcomes are achieved for those 140,000 active and deferred members. But we've also got a really strong infrastructure of IT capability that backs up that administration. In terms of core values, this is all about our culture. And we try to have synergies and with our strategic partnerships such as Wahed. And when we spoke to Wahed over a year ago to have this partnership, we saw those flowing out of their business as well. So in terms of showing care and respect, that's all about making sure that we treat all of our customers with the utmost care possible. Having a passion for excellence is all about doing the right thing and doing it first time. Striving for business success is a recognition that we are a business and we're looking for the most efficient ways of dealing with schemes and their members as possible, but that's of benefit to us and equally our clients. Now, working together, this is all about that partnership approach that we have, whether we're talking to introducers, employers, independent financial advisors, employees, or indeed our own staff. It's making sure that we're working together to get the best possible outcomes. And taking personal responsibility is really important. That's where our customer centricity really shines through. It's about ownership and accountability, ensuring that all clients know who is looking after them, and equally resolving any issues that might come about. So if we can have the next slide, please, Abel. So this is just to summarize what we've been talking about tonight. We're really proud, just like Abel is at Wahed, to provide a fully diversified Sharia compliant workplace pension scheme. And we believe that this is the first in the UK. Options UK have a wealth of experience in running company schemes, and we do them really well. We've got some very strong corporate governance from a master trust board, an independent board of trustees who look after the members' best interests. We have excellent service delivery from a really experienced team. And equally, product development is a continuous program for us. It's not just a one and done. Our parent company, STM, constantly ensure that we are provided with sufficient funds to provide continuous development of our proposition to make sure that we're continuously market leading. Wahed Invest are providing this really innovative Sharia compliant investment solution, and it's a range of solutions rather than just one particular solution. So that portfolio design that they've come up with, it allows Muslims to save in line with their faith, but it also allows them to save in line with their attitude to investment risk. And if they don't have the time, knowledge or inclination with regards to self-selecting, they've got the lifestyling approach so that they're invested in a risk appropriate fund or portfolio throughout their working life. So we're really, really proud of this. We believe it is market leading, and it's the first in the UK to offer that risk rated approach and the lifestyling within it. But what are the next steps? Well, as an employee, please speak to your employer. Ask them if they're providing an existing Sharia compliant fund or indeed portfolio. If not, perhaps they might wish to review it. We'd be more than happy to speak to them about it. If you're a business owner, please get in contact with us. We'd be more than happy to speak in any further detail with regards to our proposition. The Halal Workplace Pension Scheme is only available through your employer, but we do offer self-invested personal pensions that also have a Wahed Invest discretionary fund management to them. As you can see, our contact details are there on the screen as well, and we'll be providing a copy of this webinar to you and sending that out to anybody who applied to join this Zoom chat. Thank you very much for your time this evening.